What's going on, team? It's Ricky with Techbot Solutions. Hope that you guys are all having an amazing Wednesday and happy early Thanksgiving. So the Fed minutes or FOMC minute report just came out. This was for the interest rate hike and the Fed meetings that were hosted in between November 1st and 2nd. One of the things that I do want to make sure that you are aware is how important it is that you understand everyone's focus. And the focus right now is that the Federal Reserve is expected to be less aggressive. Now, based off of these FOMC minutes, there are a couple of things hinting on it, and I want you to do your own due diligence. I'm going to share one of the major pieces for me. It is a very long, kind of hard to read document, but I want you to have the option to be able to, do your own due diligence. So I'm going to link this website. It's directly from the federalreserve.gov. They report this every single month. Anytime that there is a interest rate hike, they follow through with the FOMC minutes. But this one was from November 1st to 2nd. Let me go ahead and scroll down. Obviously, these are all the participants. And then it's a quick summary. It's supposed to be quick, but guess what? It's still pretty lengthy. So scrolling down here, I'm supposed to have a piece highlighted. Yes, I do. So a number of participants observed that as monetary policy approached a stance that was sufficiently restrictive to achieve the committee's goals, it would become appropriate to slow the pace or increase in the target range for the federal fund rate. In addition, a substantial majority of participants judged that a slowing in pace of the increase would likely soon be appropriate. So again, all it's saying right now, again, they use terms, in my opinion, that are kind of like hard to make sense of, especially if you're trying to have a better understanding of are they going to slow down or are they not, right? It's just because of all the terms that they use, within this report. But pretty much all that, what they're saying on this summary is that originally it wasn't really supported, but now a substantial majority of participants, meaning that a majority of the people within the Federal Reserve have judged that slowing down, meaning slowing down at the rate that they raise interest rates, would likely happen sooner than later, and that it is appropriate now because, based off of the last CPI data report, again, it's just one, but it did come in a lot lower than expected. A lot of you guys remember when that report came out. It came out at 7.7% inflation, and I think the expectation was 8.1%. And it looks like the market is still reacting in a very positive way. This is TQQQ. It looks like we're simply retesting that same resistance level. The NASDAQ market closed 1% in the green. We're testing that same resistance right around like 22.80 to $23 a share for TQQQ. We did go back and retest this all the way down to lows of the moving average, and then it quickly recovered shortly after that FOMC minutes report was released. But again, I wanted you guys to have the option of knowing where you can read this actual report. I know a lot of you guys are just getting into the stock market, so knowing where these reports are being released is only going to be useful not just for yourself right now, but even your future self, right? The more you know, the more that you can be informed. But again, the whole purpose of this is all we're trying to see is to make sure that the Federal Reserve is going to lower or create less aggressive interest rate hikes. And hopefully in the month of December, they do that, right? Because if everything that's being factored into the market right now is expecting that the Federal Reserve will slow down, but then if we see that they don't slow down, let's say that they continue to raise interest rates 0.75%, what do you think is going to happen to the market? The market most likely is going to sell off, right? Because it was factoring in a less aggressive interest rate hike. Now, again, if it does end up reporting what they end up being able to factor in right now, meaning that if the Federal Reserve actually does become less aggressive in the way that they raise interest rates, right? So maybe a 0.5%, maybe a 0.25%, then the market should react in a positive way. And again, it's no surprise that the markets tend to rally towards the end of the year. So again, it's something that I'm very excited to follow up with. But I wanted to make this very quick update. I wanted to provide you guys with that resource. It's going to be linked down below. I don't want to take too much of your guys' time. I know a lot of you guys are spending time with family and loved ones. So wish you guys nothing but the best. If you guys have any questions, you guys know where to hit my line. It's going to be on Discord, which is the first link in the description of this video, or you can send me a direct message via Instagram, and that's that third link down below. Friendly reminder, I only have one Instagram account. All the other ones are fake big one. So again, if you want to be able to watch me trade live every morning, I do trade live exclusively with one team and one team only, and that's my Learn Plan Profit team. That's that second link in the description. We are running a Black Friday special. It is also a Black Friday giveaway. So if you do sign up from now into November 28th, you get automatically entered to win. You don't have to do anything. Just as long as you sign up between November 14th and November 28th, you get automatically entered to win a total of $6,500 cash. First place $3,500, second place $2,000, third place $1,000, and on top of that, it's also $150 off, which is the biggest sell that we offer, and that's just promo code Black Friday at checkout. So if you have any questions about this, feel free to send me a message. If not, wish you guys nothing but the best. Hope that I earned your thumbs up. Please consider subscribing, and like always, let's make sure that we end the year on a green note. Take it easy, team.